Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis updated commodities. We'll work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com, where I just released a midweek update this morning. I did update my purchase history. If you guys want to see what I did purchase, it was a small purchase, nothing too big. And we still have the coupon code Mayday that is still active if you want a discount. Let's dive in. Let's take a look, see what's going on today. We've got the DXY continuing to show weakness. I don't zoom in this far. I like to back out and take a look at it from this perspective. And this still looks good to go lower. And the dollar dropping is a result of the bond market and interest rates dropping. It's also a pressure point in the system where the Federal Reserve has been keeping interest rates high to keep the dollar stronger. And the dollar strength is slowing inflation to some degree, is why they are doing that. And it results in a stronger dollar. It's elevated. That is broken. They're going to lower interest rates, and it's going to put pressure on the dollar to drop. We've got the 2-year yield dropping 2.5% today. Pretty big move. This could be a double bottom, but I will say that the momentum generated from the candlestick today looks pretty good. So we could see this break even further to the downside. We've broken major support that's above us, and that does look pretty weak to continue to fall lower. I would guess over time that we could get into the 2-year at 1.5–2%. How could it get down there? The unemployment rate continues to go up. That is how. Weakness in the economy. Fed has most likely been too high of yields for too long. The market starts to deteriorate, and when they start to do action, they are too late to start that action. So they're going to overreact in both directions. The 10-year yield also dropping, and that does look like it will continue to drop further. Pretty big selling, lower yields today and yesterday. Same with the 30-year. So people are running into bonds, the 10-year, the 30-year, and the 2-year, to lower interest rates. So we'll see bond prices going up as yields drop. And these do look pretty weak, and we could drop a pretty good way in the future. TYX-TNX ratio, we were up 0.44% today, breaking out of resistance. We're going to go higher. What does that mean? Why do I look at this? It means that precious metals are going to get a big tailwind here. Rates are going to drop. We're going to see a slowdown in the market, and this is going to be a big tailwind. Now, that doesn't mean that every single day we go higher if this goes up. What it means is that it's a big tailwind behind the sector, and gold and potentially silver could go up dramatically during this time frame this uninverts. So your entry point was down here. You ride it. Gold and silver. Gold mostly is going to front run everything. That's the leader. Silver's going to react, and it's going to be reacting a little bit later, and I think it's going to come at any second. Bond prices are higher, up 1.25%. It looks like we're not going to get that pullback at all. It looks like we're just going to continue higher. We know that this is going to go up over the longer term because we've got a broken downtrend, and it's going to melt its way up for a period of time. It's only going to be during the period of time where we have weakness in the market. That's the only time this is going to melt up. And then, in my opinion, it's going to turn back lower. We're going to have to raise interest rates in the future. So if I were to show you on the 2-year yield and I back out, we've got a broken downtrend line, a breakout of that downtrend. We're going to come into a retest here where they we basically flush out a bunch of crap in the system. We'll come back. That's the flush out and the weakness of that flush out. They're going to lower rates. We're going to probably see a strong housing market when those rates are felt, maybe not in the immediate term, but at some point in the future. We're going to see housing starts continue to go higher, and then they're going to have to raise rates again. This is very similar to the tech bubble in 2000, 2001. That's how I think it will play out. We're seeing the yield curve on invert. We're down 0.64. We are at 1.0 right now, 1.002. So the 10-year and the 2-year equal each other at this exact moment, basically. And when we cross through this point, if we continue to see the 2-year drop, which I do think it could, this is where your weakness comes from. The play here is not inflation-sensitive assets necessarily. It's more about defense. Gold, bonds will probably go up here for a period of time. I'm not a big fan of bonds because I know that they're going to reverse it in the future. But precious metals, they look pretty dang good. So looking at gold, gold's up a little bit. It's only up 1.2 per ounce, but I do think this will continue higher. I do think the tailwinds are all lining up behind it. I think silver's going to rip here at some point. We're up 0.53%. We might not be completely done with this pullback yet, but probably pretty soon. And we're sitting on top of the pattern. We've got a large buying pressure candlesticks in a falling wedge or pennant formation. That is a bullish formation sitting on top of support that has broken out from resistance. Bullish, big time bullish on gold and silver, physical metals here. Very bullish. Very good looking charts. Platinum is still squeezing. This has a little bit more of an inflation tinge to the metal than gold and silver. Gold's a safe haven asset. This down here, this is a perfect spot to be looking, in my opinion. And then palladium down just a little bit, and we're above a lot of support for palladium. A lot of support here, but this could fall further. If we get weakness in the market, which it is exhibiting weakness across a bunch of different sectors, we could see this pull on back a little bit further. And that will be a great entry point. I will buy a lot of different things if that does occur. So GDX down a little bit today, down about almost 1%. Same with GDXJ and same with SILJ. So we're seeing some short-term weakness, but the metals are on top of support and they look great for a move higher. So we want to see where this bottom is in this, and I would be looking for entry points wherever this thing does potentially bottom over the next trading sessions, whenever that is. We've got XAU to gold ratio. It was pulled back a little bit more today, and we're still above the support line going across here. We're at an incredibly low level, and in my opinion, this will probably be the last best opportunity to deploy capital for a long-term investor for what I think is coming in this yield curve on inversion. And, there could be a false flag event. There could be a liquidity problem where everything sells off together for a period of time. That's not really going to be that great in terms of timing it. I don't think anybody can really time it with precision. But overall, as that occurs, this was going to break because you're going to see increased gold prices, increased silver prices, and then you're going to see crude oil probably stay low. And then the margins of the mining companies expand during that market condition. Crude oil down 2%. We are breaking support here to the downside. I went over the midweek update, my opinions on all this. And we are getting that false breakdown weakness before the big move. So that is occurring. And we could fall quite a bit. It is in the cards to fall, a little bit here. Get ready for it mentally. TTF gas falling about 4% today, and that does look like we could continue a little bit lower here in the short term. We've got natural gas in America down today. It doesn't look as bad, but it'll probably move around here. Energy's not the best spot to be during a slowdown in the market because a lot of people think that demand will be destroyed. We haven't seen that demand get destroyed yet, but the markets are forward looking. So if they see that the yield curve in smart money is positioning in bonds and we're starting to see the yield curve on invert, they're discounting future demand destruction through the pricing of all this. Our boy XOP, yeah, you know me, it is heading a little bit lower. And that worry that I talk about, the big selling pressure candlesticks and a potential move lower, it is manifesting itself right now. So this is the move lower that we're getting. And I don't think it could still continue. Doesn't look done yet. Same with OIH. So what this is, it's a big selling pressure move. You've got a pattern that is angled upward and it's broken to the downside. Whenever you get on the right-hand side, the patterns start to angle upward. So on the left-hand side here, your patterns are angled downward. So you come on up, your patterns are angled downward. You come on up, this one you can't really tell. This one, it's a pattern that is angled downward. And then you keep coming up. And then what occurs is when it changes, your patterns start to angle upwards. And that is a pullback, is what that is signaling. Newcastle coal futures, we pulled back today a good chunk, about 1.9%, and I do think we'll go sideways or higher still. But we're going through a slowdown, so we can get yanked lower. Sprott Physical Uranium Trust up 4.6%, looking pretty good. That actually looks like a pretty good candlestick. We'll see if we can get some momentum generated here to the upside for uranium. We've got UX1, the futures pricing sideways at the moment. We've got URA up a little bit. We still have downward momentum. We need to turn this around before I get bullish on it. URNM also upward momentum a little bit, or up today, but the downward momentum still exists. And then URNJ. And a lot of times you could get a double bottom here. But we got to see follow through this. I am not convinced that there is a buying opportunity yet. It still looks like we could head lower. This is an inverted bloody nose, and the continuation is lower on it. So I wouldn't be jumping in just quite yet. This is copper futures, down a little bit, and it still looks like we've got downside momentum. And the yield curve on inverting, all of those things, the worries of a recession or slowdown are all being priced into the market right now. COPX, also a little bit lower, but it still looks like we've got downside momentum there. Iron ore holding steady, but we've got downside momentum. That could head a little bit lower in the short term here for iron ore. We've got the big selling pressure red candlesticks that have showed up. We've got aluminum down a little bit, momentum still to the downside. We've got nickel with momentum to the downside as well. I probably wouldn't jump in front of that yet. This is an angled upward pattern. The downside momentum. Mu up 0.8%, surprisingly. And that's holding together quite well on top of a falling wedge. So that still looks bullish and could potentially move higher. But again, would you bet in the face of all this weakness? That's the question. But it doesn't look bad. Emerging markets holding steady. We've got weakness in the overall markets, but we also have weaker dollar, weaker yields. So it's sideways today. KRE also moving sideways above a lot of support, and it's up against a lot of resistance here too. If you look back, there's a lot of trading that's gone through here. A lot. We've got TAN up a little bit today, about 1%. Just been chalking sideways there. Lithium also moving sideways. I'd like to see some better support here to determine if we really do have a bottom in it. REMX is also trying to find that bottom, and I don't know if it's found it yet. We'll find out here over the next few trading days. Baltic Dry Index up 1.5% or so, and that actually looks good to go up for the Baltic Dry Index. XHB slightly lower today. It's holding in there. And home builders have not turned over. Back in 2005, 2006, we had a top and it rolled over. It was a head and shoulders top that rolled over and came down before the markets were weak. We do not see that here. This still looks strong and is still in an uptrend, which makes me think that we are going through a technology slowdown and we'll see if the home builders get hit here. We'll watch it and see if the construction workers get hit. That's what we're watching next. But it's been strong and it's towards all-time highs. Russell 2000 moving sideways. Momentum is still lower, but we're at support. We'll see if it holds. There it is. That's support line. S&P 500 is down a little bit. It still has downside momentum from yesterday. And the NASDAQ has downside momentum. We'll see what it trades like over the next few trading sessions. This very well could head lower. This could get ugly, guys. SMCI down 4% and still looks pretty nasty. There's the weekly there, if you want to look at the weekly candlesticks. NVIDIA down 1.6%, and it still looks like we've got downside momentum. And we'll see if some of these support levels hold going across here, about 95 bucks. Bitcoin holding steady. It's moving sideways in a falling wedge that's generally bullish to go higher. And then Ethereum up 1.19%. That is a downward facing big old pattern. And it hasn't broken out in either direction yet, so we'll see what occurs here. Some people are suggesting that this could break lower, and it very well could. We'll have to see it. That's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And that's all I've got for today. So we've got a Sunday question and answer session at 5 p.m. If you want to show up, I can answer whatever questions you have. And that's what I've got for the update, guys. So we'll catch you next time. This is Finding Value.